a break of structure as a continuation pattern or trend. Now, if you look at the bullish trend, one thing is very visible. A higher high, you always spot higher high and higher low. And if you're looking at the bearish trend, you always spot something, a lower low and a lower high. Now, that being said, one way to spot the chart in case you're already being confused, you can't tell what the chart is doing, is to jump to the line chart. Just take, for example, now, looking at this chart, for example, now, in case you are feeling confused in terms of tracking the market structure or mapping the market structure, you just go to your chart, quickly switch it to a line chart. We use the line chart as a cheat in considering the market structure because the line chart factors in only the closing price. We use the line chart as a cheat or a precision tool in seeing market structure because it factors or considers the closing price of a particular candle only. So let's just quickly move it back to the candlestick chart and we'll face the business of the day. We're looking at break of structure. So let me do this way. Okay. So break of structure as a continuation pattern. We'll be looking at those charts now. For example, now we're having this higher low. There's a higher high. This is a higher low. Now we notice that the market did something as it stepped into this level here. The market broke through this higher high to create another higher high. Now, the moment the market broke through this higher high, there is something called structure change. Structure changed from here to here, now from here to the new high. This is the new high that the market created. Structure changed from here to here. Now, we will no more be looking at this range again. We'll be looking at this range. Are you getting me? We'll be looking at this range. And the moment this range likewise is being broken by the market structure, we'll no more be looking at this range. We will not be looking at this range likewise. We're looking at this range likewise. Now, how do we define a clear break of structure? Now, what I've said here is likewise applicable to this bearish trend we are seeing here. If the market breaks through this lower low, our structural part, we will say that there is a structure shift or a shift in order flow from this range now to this range. In every range, we are always looking out for what price is going to do. If price breaks through this higher low, that's an indication that the bears just stepped in to the market. And if price breaks through this higher high, that's an indication that the bulls are still in control. But we will narrow our what I'm trying to explain so far to the continuation trend, which is a break of structure. For now, we're not looking at breaking market structure or change of character. So that being said, let's still move on. This is a higher low. This is a higher high. Now, at what point do we consider this break of structure to be valid or right? The point at which we consider this break of structure to be valid or right is when the market closes with a candle body above this higher high. And we consider it a valid break of structure as a continuation pattern when the market closes with a candle body below this lower low. Yes, it must close with a candle body. We are not looking at the high or the low for now. If you're looking at a candlestick chart, we want a candle body close. Now, let's take, for example, at this level, okay, let's use this range. Let's take, for example, at this range. Okay, let me get this. At this range, let me take away these. At this range, we notice that the market did something like this. Let me say, we notice that the market did something like this. believe me, this is an invalid close. This is a weak. We'll say the market wicked through that level. I will not feel safe trading it. I will not feel safe trading it. To me, this is not a continuation. I will only feel safe trading this level if I notice that the market, take for example, on a level like this, that the market closed. Let me take this out. The market closed with a full body candle above this level. The market must close with a full body candle. At least we are looking at the candle close now, not the high, but the candle must close above. Now, the same thing is applicable to the bearish trend. We wait for the candle to close below the lower low. Now, take this. In a higher high, the candle, for a break of structure to be considered valid, the candle must close above the higher high. And in a bearish trend, for a break of structure to be considered valid, the candle must close below the lower low. The candle must close below the lower low. Must have something like this. We must have something like this. Because this is the candle close. This level here is the candle close. And this is the candle high. So we want the candle to close above the level of this structure range that we're looking at. This is a structure range, these points and this point. So for a continuation to be considered valid, we want a close below this level. So that being said, let's just quickly look at the chart. I want this very module or this very concept I'm explaining on this module to be as short as possible. Now, looking at this very chart now, what do you notice here? Let me take this off so it will be clearer. I don't want to take everything off at once, so that's why I'm taking it off one after the other. Now, what do we notice here? This is a valid close above this level. The candle closed above it. So this is an indication that the trend is still continuing. Watch this level here. We'll have a valid close above it. The trend is still continuing. Now watch this level here. We had a valid close above it. So we want a valid close above it in order for us to continue trading in line with the already existing trend. So for that being said, for now, we'll be looking at in the next class, we'll look at valid levels and invalid levels. Thank you.